Good evening, everybody.
Hello.
Kamari Ellis, the Finance Rebel. We are here today, Wednesday, for the Money Hour. We're running a bit late. I would love to blame it all on my guests, but some of it's my fault because I was changing my setup and I didn't have everything together. So you can always blame me. Today, we're going to talk to Kay Renee West, who is a former IRS tax agent, and she is currently an enroll agent, which basically means she can go before the IRS and represent clients and people and help them work out their tax problems, hopefully save them some money and keep the government from swindling them like many, many, many other people like Wesley Snipes, like Fat Joe, like Lauren Hill. So we're going to talk to her today about handling audits, avoiding audits potentially, and many, many other things involving tax and IRS. So good afternoon or good evening to my people on the East Coast. You're on the West Coast, right, Renee?
Yes, hello.
All right. Well, did I miss anything? Do you want to tell anybody who you are or give a better explanation than I did?
Well, I worked for the IRS for 9 years in collections and as an auditor, so I know both sides of how balance dues come to be and the mistakes people make to actually be audited. So I'm experienced. I'm here to help the people. I've seen people pay thousands of dollars for assistance, and unfortunately it did not help them. And it's just really because people didn't know the inside or understand exactly how the Internal Revenue Service works. So I'm just glad to be here. Thank you.
Well, thank you. I'm honored. I've been trying to get somebody from the service to come on. I have a really, really good friend who I did a secret anonymous interview with some years ago. And they didn't give me a whole bunch of information, but they gave me a little bit of insider dope, but I wanted to get the goody. So now that you're not with the service, but
Yes.
you got plenty of experience, you can spread some love.
Right.
Okay. So, all right. So first question, what's one of the craziest stories you've ever experienced when you were with the IRS?
Okay, I can actually I'll tell you about the very first audit that I completed. So I went to training. I went to training for 5 weeks to learn about basic income tax returns. During that session, they're called phases. So during phase 1, we learned about the Schedule A. So the instructor was like, you'll never get a taxpayer to walk in and just confess that they told a lie on their return and that they were trying to get money. So just be aware, like, you have to be really, really inquisitive and ask a bunch of questions and just really try to dig the information out. So I was like, oh, okay. So my very first audit, so I'm nervous, I'm scared. I'm like, oh my gosh, like I'm about to really be in this person's business. And I hope they understand, like, this is my job. Like, I'm just not really trying to be in your stuff like this, but this is what they paid me to do. So I explained to the gentleman what's going on and the expenses that I'm going to review and audit and make sure that he was entitled to them per his return. So one of the issues was dependence. And he was like, yeah, so I claim this girl on my income tax return and she has 2 children and I claim that. I'm like, okay, like, so you just have random people on your return, sir? Like,
Yes.
is she your girlfriend? Is she your wife? He was like, it's just this girl that lives with me. I said, she lives with you? Like, what do you mean, sir? So he was like, yeah, I mean, it's my girlfriend and I claim her 2 kids. Like, her baby daddy doesn't do anything for him. I take care of him. So like I put them on my return and they're living off me. She doesn't work. And I was like, oh, okay. So then we go to the expenses that he claimed for unreimbursed employee business expenses. I was just like, okay, so can you please show me your reimbursement policy from your employer? He was like, oh yeah, I don't have that.
Wait a minute. Stop right there real quick. So when you file taxes and you file that you're getting reimbursement, you have unreimbursed expenses. So basically you have expenses from your job that they did not pay you back for.
Exactly.
And you get audited, you have to show the policy from your job. Is that what you're saying?
So the very first step, the very first requirement listed in the Internal Revenue Service manual, it says, step 1, have the taxpayer provide the employer's reimbursement policy. Because the audit can go many different ways based off of that. So some people they just buy stuff to buy stuff, but the employers never approved it. Like, we want to see, what does your employer say about expenses? Do they cover them? Are you supposed to seek approval for them before you purchase them? Do they provide you the money up front for you to get it? So there's just different things. So some people, they just go shopping and then like throw it on a return. So did I answer your question?
Yes, you did.
Okay. So this particular guy says, he was like, so I'm asking my questions. And so he says, you know what, Miss West, I'm going to just go ahead and give it to you straight. He said, I needed some money. He said taxes were due, and I just needed a little white redneck justice. I said, I'm sorry, what? He was like, honestly, like, I just needed a little white redneck justice. He was like, I just made the stuff up. Like, I knew I wasn't supposed to get it. And I was like, if they let me slide, cool. If I end up
I gotta ask, white redneck justice. This was almost 10 years ago, before the current president. Was this guy a white redneck, or was he a person of color?
He was, I don't know if he was a redneck, but he definitely was white.
Well, that's how he described himself, right? He described himself as a white redneck. Okay.
He did. And like all of my coworkers, like when he said that, like everybody's like, like, what? Like the room stopped, like the room spin. And I was just like, I don't even know what to do with this. Like, do I put taxpayer admitted that he lied on his income tax return? Like, I don't even know what to do. I was like, y'all said that it would never be this easy. So, well, hold on, let me go talk to my mentor to find out, like, can I put this quote in your report? They're like, hey, if he said it, put it on paper. We all heard it. So basically, like, I made the adjustments to his return, and he ended up owing like $16,000. I do remember his name. Of course, I'll never tell y'all, but
yes, please don't do that.
And I was just like, you know, I'll never forget you, sir. Never ever. He signed everything right then and there and was like, can I have the form for an installment agreement? It was great.
Wow, so that's your white redneck justice case. First case out the box, huh?
Yep.
So that's the craziest thing you've seen. So you've seen somebody, because I get every year, I hear or see or experience somebody who basically files using somebody else's kid because they want to get a bigger return. And, you know, I've lost clients or potential clients over this because I tell people I don't dream up numbers and I don't do fake stuff. And I've almost gotten into fights over this, sadly. But it just amazes me what people will do to go get a higher income tax return every year.
Right. The refund thirst is real.
Refund thirst. Okay. Hashtag refund thirst.
Absolutely. It is real. I would say for me, I actually work like in a high-end area with people with money in Walnut Creek, California.
Okay.
I didn't move to Oakland until actually my last year with the service, which was last January 2017. And then I left in September of 2017.
Okay.
So for me, I ended up seeing people with money. And basically, one of the guys...
I just realized something. I've been walking around with my weight vest on the whole time.
I didn't know what that was.
It's my weight vest. I'm on a bit of a journey. I'm trying to lose weight.
Hey, I'm with it. So one of the guys, okay, so someone had bought, like what I loved is that people just thought I was stupid. Some people thought I was the receptionist. So it was always great to have those encounters, and I'd open the door. So if it's your appointment, then you open the door. It was only 4 of us in that particular office. So I would get the phone call, so I would open the door, and one particular guy, he's like, so I went to my desk, and he was like, oh, okay, oh, you're the auditor? I said, yes. He said, oh, I thought you were the secretary.
Yeah, that happens pretty often.
I said, okay, you ready for this audit? Let's do this audit. So he actually thought that I didn't know. You know, during the audit, like we play like we're stupid. We play like we don't understand what you're saying. We make you feel very comfortable with telling us all your secrets, all your income tax return secrets. So basically his issue was depreciation. So I acted like I didn't understand. And
So
he had
let's
a condo.
hold on. We just threw out one of those $5 words. So depreciation, folks, it's one of those funny accounting terms. It's like part of made up accounting terms where you take an expense. So for example, if you buy a house, you have to expense it, and it's a rental property, let me be correct. And it's a rental property, you have to expense that over a certain lifetime, over the lifetime of that property. Usually for most rentals, it's 27.5 years. I won't bore you with all the other techniques, but again, if you buy a property for $100,000, you can't write the whole $100,000 off. And this also applies to many other business assets as well, computers, um, heavy equipment, and things like that.
Right, exactly. So he had a condo in Hawaii. It was brand new. He said that it was a rental property. He stated that he had lost money on the property. Because it was a rental property, he was able to claim his HOA expenses. So I looked at the form, and so like he basically like had made it so that it was passive. It wasn't passive income. He made it so that it was enough. He owned enough shares so that it was ordinary income. So I was like, okay, well, can you tell me more about the partners? And long story short, his partners were his minor children who were also on the HOA, because on that particular rental property, you had to list who actually was in your household and who had access to the pool. Like his HOAs for that particular property, I want to say were like $1,200 a month. And so again, because I had acted like I was naive and didn't understand what was going on, when I responded back to him and called him out on all of the lies that he had told during the audit, he kind of was stuck, like, whoa, I guess you really are not the secretary. No, sir, I'm your auditor, and I'm very familiar with the tax law. And
you disclosed that to him in the beginning, so it was his ignorance and arrogance that he just proceeded forward like that.
Exactly. So basically, he wasn't able to write all those expenses off, and he had a very hefty balance due.
Well, let's back up for a minute, because you said he had his minor children also listed on the property as well and on the HOA.
He had them listed as partners in the partnership.
So was it LLC or was it really a partnership?
It was the LLC, but the IRS doesn't really acknowledge LLC.
Right. Well, everybody knows them as LLC, so that's why I put it out there like that. So what's the ramifications of having your children on the LLC and they're minors?
They're not real partners, so they're disregarded.
So then,
and you also know that basically your children, like, they're minors, so you're in charge of that money. So we really give that money right back to you.
So then they would have to file a child income tax return for them.
Absolutely.
If it's over, I forget the limit. I haven't done one in a while. I think it's like $1,200.
Right, and he hadn't filed an income tax return for them. Like the way that he had fandangled the numbers was basically like they didn't have income. It was just really more so about his percentage in the partnership to make it be taxable ordinary income, so that he could actually write off his regular wages from his employer to decrease his tax liability. That's really what all that was about. So the business itself didn't make money. It's just that he wanted to claim the loss.
The lion's share of the loss.
Right. And wanted to claim it in that year versus carry it forward.
Okay. All right, so we get all these weird audits. People think you're stupid. I'm guessing a lot of people think many of the auditors at the IRS are stupid. And so they file these felonious fugazi returns. So I'm guessing that happens a lot, right?
Say that again. I'm sorry. It actually broke up.
Well, when people file these felonious returns, I'm assuming that happens a lot.
I want to say sometimes you see some stuff and you think that it's going to be fake, and honestly, it's true. So I would just say it could be more like a 50-50. It just depends on the area that your audits service. So in Walnut Creek, like some stuff, like they made money, so it was true for the most part. But sometimes people overstate here and there.
Right. I got you. I got you.
But in Oakland, maybe that wasn't really true. They don't own anything. But it looked good on paper.
Got you. Got you. Got you. So, I mean, what I was going to ask was, what are some things that will draw a red flag, right? Because, many people think they're going to get audited all the time. Some people think they're never going to get audited. So can you talk about, what actually leads to an audit?
Okay. So one thing I do want to say is there's different types of audits.
Mm-hmm.
So there's a correspondence audit, which is conducted by the service center. That's an audit where you just received a letter in the mail asking you for information, and they expect for you to respond within a certain time frame. And there'll be a phone number for you to contact that particular auditor, and you let them know if you have questions. Then there's a office audit. So I worked in office audit, which means I mail you a letter saying, hey, during the pre-contact stage, saying, hey, my name is Ms. West, and I want to audit you. I'm asking you for your return, and I want to look at these up to 6 issues. And call me back within 10 days of receiving this notice. And if I don't hear from you, then we're going to proceed. However, if you call the auditor back within the time frame, then you can tell them honestly, I'm not, you'll try to pick out a date. Let's say you can't agree on a date, then you can ask for a correspondence audit where you actually still don't have to come into the audit. The auditor will send you a list of questions and you'll answer those questions. You'll mail them back. In the perfect world, the auditor will have that information to review while they're reviewing your documents. And so they'll set it out on their calendar. They may tell you it's due, let's say July 20th. You make sure that they have it by July 15th. Then they'll review that information. They'll ask that you be available during 10 to 12, which is when they're going to be reviewing your documents. So should they have questions, they'll just pick up the phone, call you. You'll answer the questions. They'll proceed with the audit. So an audit, there's an audit report. And basically the IRS compares, there's different type of audits. So I wrote them down, bear with me one moment.
Right, you said correspondence, and you said,
well, even with that, no, so those are different type of audits as far as the location. But then there's also, anybody can be audited.
Right. But so, isn't there a field audit also?
Right, but that's a revenue agent.
Right. Well, I just want to
tax compliance officer.
Okay.
So a revenue agent is who comes to you, and you could be in the middle of fixing a pizza, and they're asking, well, can we speak to the owner of this Domino's?
Right. And so
you're that's me.
Okay.
And so but before that, they've already called you or they've left a card to try to get in contact with you to schedule a more agreeable time to meet.
Gotcha. So basically a person has to be delinquent or derelict in getting back to the agent that tried to reach out to them in the first place.
Exactly.
Okay.
Exactly. So when I go back to anyone can be audited. So there's an audit, so they're called projects sometimes. So there's the National Research Project, and that basically means, and it's random, that means every single line on your income tax return is being audited.
And what's that?
Every National Research Project. So we in the TCO world, we just call it an NRP audit, and when you get it, you want to quit on that day because this audit is going to take forever. It's going to take forever to do the report. You already know the person's going to be like, really? You want me to prove to you I spent $100 on tissue paper? Are you for real? And unfortunately, sitting there yeah. How many sheets? Was it 2-ply or 3-ply? We need to know this information. Then there's the diff. So the average person normally receives a diff audit. So that means that the IRS compares your income tax return to everyone else in the country who filed an income tax return, And there's something about your numbers that look higher than everybody else.
Okay.
Those are the people that we normally would audit. So we get it's a folder. The folder starts off like really thin. It's maybe like 10 sheets of paper in it. And it's a fake income tax return. So when you get a request for an audit, one of the things that we ask you to bring your income tax return. And people are like, well, why have I got to bring my income tax return? Like, you're the IRS. This is true, but your actual income tax return is stored somewhere off-site. However, if you want me to get this audit right.
Are you telling me the IRS is everything digitized and easy to grab and listen to, and easy to review?
To actually see every single line of the income tax return, we don't have that. Like, we have to complete a special form to request it. And that form, like, we may receive that return by the time of your audit, or we may not. So to help not waste your time, we automatically ask that you bring in a copy of your income tax return.
Gotcha.
So if information is missing, when we actually run your audit report, it may show that you owe more money simply because we were missing information that was originally on your return. So we're asking for that return to help you so that you'll owe less. Because without that information, you could owe more.
Right.
So that's the diff. So let's just say, like, it tells us like to look at the car and truck expenses, look at the depreciation, look at the mortgage interest. So we automatically, okay, so that's what you're going to be audited on per what the system kicked out and said, this is what we want you to look at based off of the diff score. However, when we're going through the pre-contact stage, which is where we're looking at your information, we've never made contact with you. This is where we're going through our 10 sheets. We're looking to see if there are large, questionable, or unusual expenses. Is there income that you did not report? So we have to check off, like, okay, if it says that your wages was $50,000 per the income reporting documents, I have to look at your return and see, did you report $50,000 in income? If I see that you reported $45,000 and that you forgot a W-2, now a new issue that I'm going to add to your audit is income, unreported income. So it can be built upon that. So you want to make sure that when you're filing your income tax returns that you report all of your income. And that's like one of the common errors. People don't report their gambling income. They don't report their interest income. That is taxable income. Report it, because if you don't, then you can end up getting a letter from the AUR department. It's the automated underreporting unit, which is, they'll send out a CP2000, which says, hey, we've received information, we've made adjustments to your income tax return, and now you owe this amount. And nobody wants to get a letter.
And that's the assessment they usually get, right? And you can accept it, and I think in 30 days or appeal it.
Right.
Okay.
Exactly. So, and I've heard different stories. Some people say, like, sometimes to take away other expenses. Well, right, because you may have just entered into a new tax bracket where you're no longer eligible for earned income credit. So yeah, maybe all they did was add $200, and maybe now you over the limit. So now it affected other areas of your income tax return. And now you're going to owe even more than what you would have originally owed. That's why you do not want to file income tax returns based off of your last pay stub. It's okay. Wait for your W-2.
Please say that again.
Do not file your income tax return based off of your last pay stub.
And please tell them why.
Because
I mean, listen, I don't know. I don't know if people have noticed yet, right? So, and I'm not trying to toot my own horn, but a lot of this stuff I already know, right? And a lot of the stuff I'm already combating, I'm dealing with people, and people will ask me, why can't I just use my last pay stub? So I just use, a lot of times, my guess as a proxy to say, listen, you don't want to believe me, I'll bring the higher authority on, and they can tell you.
So the reason why you don't want to use your last pay stub is because the refund thirst is real. And if you're refund thirsty, then you're going to end up on a balance due later on down the year when the IRS runs their numbers to make sure that your income return matched the income that was received her, the employer, and all the other sources of income, because everybody has to report that they gave you money once it reaches a certain dollar amount. If it's wages, they have to report it. If it's a 1099, once it reaches $600, they have to report that income because it's taxable. And with all due respect, even if it's less than $600, it really is still taxable income. And I'm gonna just say that one time you live your best life.
No, say it again. Say it again. Say it one more again.
If you receive less than $599, that income is still taxable.
That's
so
right.
report it. Like, some people don't report all of their income, or they overstate their expenses, but now they want to buy a house, and now they want to amend their income tax return because now it shows that you have no money and that you don't qualify for stuff.
Oh yeah.
So
my barbers and my hairstylists are very notorious for that. No shade though. No shade.
It's all in love. All in love. Like, my thing is, I just want people to know the truth. Know the truth, and then you make whatever decision you make based off of knowing the truth.
Right.
But I've met and encountered a lot of people during the audit who were like, I didn't know this. I didn't know that. Like, they never told me this. They didn't tell me that. And I'm like, well, understand this. My wages are my wages. I'm going to make the same amount this hour, whether I tell you the truth or you don't show up. I don't gain anything from telling you the truth. So I just think that people should be empowered with the knowledge, and then whatever decision you make, like, do you.
Yeah, but in the long run, to me, it's not worth it. But I want to back up real quick to talk about 1099. The onus of reporting income is always on the individual. The tax doesn't matter because one issue that happens fairly often is these 1099s are late. Sometimes people don't issue them at all out of ignorance.
Exactly. Right.
You still, like Renee just said, if you made $2, you're still supposed to report it. If you made $10, you're still supposed to report it.
Absolutely.
$1,000, you're still supposed to report whatever income you make.
Right. It's taxable. Straight up.
Okay.
And it's taxable.
So person gets an audit. Let's say it's a correspondence audit. Should they freak out? Should they hire somebody? What should they do?
Okay, so my mindset is this, and this is what I used to explain to my taxpayers. When you receive a call or the letter, really it's a letter. They did test out calling people to say that they have an audit, but people didn't believe that the IRS was really calling them because of all the frauds. So they was like, okay, this is not working, so we're just going to stick to mailing out the letter. So
listen, sidebar, the fraud calls are legit. I know, the IRS is always going to send out a letter first before they call you.
Absolutely.
But usually they don't call anyway because, I'm not even going to go there. I was going to say something about budget. But yeah, don't take those calls. They are very convincing. They're trying to sell ice to an Eskimo, and they are pretty good. This
is the thing, and I want people to understand, honestly, the IRS does call you. I have worked over time and called taxpayers on a Saturday. The IRS does call you. Hear me loud and clear. The IRS does make outbound phone calls.
But what's the process?
However, we cannot be aggressive. So that's your first indicator that this is fraud.
But wait a minute.
Not be aggressive at all.
But what would cause you to call? When do you call?
So we would call when we're working inventory or when we're returning a phone call.
Right. So you return, but a letter at some point was sent.
Well, letters are sent, but this is the thing too, Clark. People, for whatever reason, do not change their address with the IRS. So if you haven't filed an income tax return for 2 or 3 years, the IRS is mailing you letters saying, hey, you have a balance due, but we're mailing it to where you lived 3 years ago. We don't have your current address because you haven't filed a recent income tax return for us to know that that's not your current address. So the IRS uses a program called Accurate that we use to locate taxpayers. So if Accurate tells us that your phone number is whatever it is, we will call that. And to you, it'll look like you've never received a notice. But we have been mailing you things. You just didn't respond because you never changed your address. So one of the things that's very important, even if you're not going to file your income tax return, you definitely want to make sure that the IRS has the correct address on file for you. The IRS mails the final notice to the address of record, and they mail that certified. The IRS only has to prove that they mailed it to the address of record. They don't have to prove that you received it. They have to prove that they mailed it to the address that it was supposed to go to.
So you mean to tell me all these bill collectors can find you and track you down, but the IRS, the U.S. federal government, cannot track you down?
I mean, they can, but that's not what they do all the time.
Okay.
Huh?
All right. All right.
Now with audit's a little different. But I mean, if you're actually working in collections, no. It's let's say it's two people that's trying to get 100 letters out, like make 100 contact with the different people. No, we can't spend quality time trying to find you. And again, that's really not our job.
I got you. I got you.
So you want to be like, I mean, what if they're trying to mail you a refund check? It's not always bad news from the IRS. I've issued some fat refunds.
What's the biggest refund you've ever seen?
That I've ever issued?
Yes, issued.
15,000.
That's it?
Yeah, because I mean, it's not common. It's not common.
No, I've got more for some of my clients. But
Well, during an audit?
No. Mm-mm.
I'm talking about an audit.
Audit. Gotcha. You know what? There was a guy at the IRS that had been garnishing his wages for about 10 years. He's such a nice guy too. And then he had overpaid and he hadn't filed. And of course, the final assessments on those years were higher than what he actually had. So yeah, he wound up getting a nice piece of change, but that was almost 15 years ago. So I don't remember exactly how much he got back. But that was a twisted kind of representation. So
well, that was going to say, but even with that, so like for my audit that I end up issuing the family the 15,000, one of their issues was their rental property. And come to find out, so, and hear me loud and clear, people, whatever money you use toward your home, that is a part of the purchase price. You include that. So if your house was 350,000 and you put 50,000 down, that is a part of your
basis.
Your cost. You include that on your income tax return. So when she brought in her final closing docs, the amount that she had included on her income tax return and the amount she had actually paid, it was off. I was like, why didn't you include this amount? And she was like, I didn't know that I could. And I was like, because she looked like me, girl, yes. I was like, you're gonna get a refund. And she was like, wait, what you mean? So I had to like really write it up, write my work papers up in a clear manner so that no matter who reviewed it, that it could be seen, which wasn't too hard to do. I was an English major. So, and another thing, let me just say this, that you may have an audit with me. My manager is going to review that case. Her manager is going to review that case. Somebody else is going to review that case. Like the case is reviewed like 10 times. It's not just, well, Miss West said that and that's it. No, the manager can come back and say like, hey, why'd you do that? So I had to explain it so that there would be no questions. So basically they ended up getting a $15,000 refund because they hadn't included all of the money that they had included in for the basis of their home.
Gotcha.
So, and they were like, well, we couldn't sleep. Like, we've been nervous. Like, yeah, you were nice on the phone, but we still didn't know like how you would be when we met you. I was like, this ain't my money. I'm going to be as nice to you as I would be to anybody else. And
listen, man, y'all lock blade up. Y'all lock blade up, so people don't know what you're going to do.
I always started my audit with, my name is Miss West. I have a son. I'm a regular human being just like you. If there are any mistakes on this return, since you've learned about this audit, if you realize that you overstated some expenses or that you put something on there that you should not have, tell me. There is no judgment, and it'll save you and I both time.
So
go ahead.
So basically, you don't like people that come in and try to play a whole bunch of games.
No, because that can honestly change the whole flow of your audit.
And when you say floor of an audit, what exactly does that mean?
Oh, I was saying the flow of it.
Oh,
so it's like, okay, yeah, like, okay, so you want me to work hard? Oh, that's what you want me to do? Okay, let's do it. Let's do it.
So basically, it's like when you run from a cop, you know you're going to get jacked up.
Right. Like, okay, like, I can play dumb.
Okay.
I have no problem playing dumb. Like, I don't understand. Oh, okay. You didn't know? Okay, got it. All right. So, okay. And you listen and you can provide empathy. Like, your auditor honestly has so much leeway. They have leeway to change your life for the better or the worse. And
So,
tax law is there to support them. So the tax law may say that you're not entitled to this, but your auditor may say, I understand. And although the tax law says this is what I'm going to do.
So the auditor has some leniency. They have some leeway.
It's not some. They have all.
They have all. So I could have filed my return with 2 cats and 5 dogs, and they could let me skate with that if they wanted to.
Okay. Well, we're not claiming pets.
Listen, that
still has to be.
That used to be a real thing. Like, people think, I guess because I've been around for so long, like that used to be a thing. People used to actually do that.
No. Okay. So no, like it still has to be a correct return for the most part. But I mean, we are allowed to extend mercy and grace to you. So let's say that you claimed, let's say you're prepared. Let's just say you put down that you spent $1,000. But then your receipts that when you bring them into the audit show that you only paid $300. I mean, I can say based off of the audit, based off of the trust and how you handled the other issues, I can say like, you know what, like I do believe that you had more receipts. I understand that things happen, so I'm gonna just go ahead and round this up to 500. Or I'll honestly just go ahead, since you've already provided a substantially accurate income tax return, then I'm just going to go ahead and put a no change for this issue.
Gotcha.
It's called the 80-20 rule. So if you provide me 80% of the information that I'm asking you for, I can let this other 20 slide.
Gotcha.
Or I can say, it's a no-go.
So do you like it when people come in with neat and prepared information, or
oh my gosh, it's magical.
Can they bring you trash loads of receipts and everything?
Okay, so this guy, please bring in organized documents, even to you're prepared. Like nobody wants a Forever 21 bag full of receipts, okay? Mm-hmm. Nobody. So I received a Forever 21 bag. I mean, he was the nicest guy. He was a landscaper. Awesome work. He showed me the photos. But sir, I'm not digging through this Forever 21 bag. That's not my job. I provided to you in our original contact how you should provide. It's called an IDR, information document request. I put in the IDR how you should provide the information to me. So he said at the end of it all, he was like, some of the expenses were not what they should have been. And I said, so, but you paid somebody to prepare this return. He said, yeah, I gave him this bag too. And when he gave it back to me, I realized that the same receipts that were on top when I gave it to him were still there. Do you think that he went through this bag, sir? Do you hear yourself?
Well, technically he was supposed to. He was supposed to. But no. That's a whole other conversation.
I don't know. Like, okay, you gonna pay for me to go through this bag? Because that definitely would affect the rate.
Oh, absolutely. You're supposed to pay for it, but
he did. From what he said, trust me, he didn't pay for that organization.
Oh, gotcha. Gotcha. Okay, so they estimated everything. Given the benefit of the doubt.
Right, exactly, and overstated his expenses, so there definitely was an adjustment.
Mm-hmm. Okay. So, I mean, I'm trying not to put too many people on blast.
It's America. I'm sure the shoe fit more than one person.
Oh, yeah, I have, but I got friends, so I ain't trying to offend nobody. But there are a group of people who work and they carry around guns, and they always have this special person they go to see their taxes done because that person seems to get them more than everybody else. How often do you deal with things like that?
with the specialist income tax preparers.
Yeah, there you go. That was perfect. That was very elegant.
So those specialists normally end up getting prepared projects.
Mm. And you
So,
normally audit many of their clients sometimes, right?
oh my gosh, that's part of it being a prepared project. So you don't know that it's a prepared project. The preparer actually knows that so many of their returns will be audited and that the IRS is looking at how they prepare income tax returns. But you as the client, you don't know what type of audit that this is. You don't know if it's the NRP. You don't know if it's a diff audit. You don't know if it's a prepare audit. You don't know if it's a focused audit. You don't know. A focused audit is where we're looking at one specific thing or specific. Like, so for a week or two, we're only looking at depreciation. We're looking at car and truck expenses. We're looking at daycare expenses. So we want to see, like, okay, based off of the population of people who file income tax returns, like what's the average based off of this? And
well,
who really like so.
I thought that was a diff return though.
No, that's the diff. So the diff is based off. So the diff is where like you're compared to everybody in the country.
Okay.
And it's all of them are compared to the country, but we were looking like based off of different incomes. So a focus audit, it could be looking at somebody who made 50,000. It could be looking at somebody who made 100,000. But how did everybody still pay the same expense for daycare?
Gotcha. Okay, I got you.
And then that's kind of how they come up with like, well, this is the average for this particular expense. People, no matter how much money they made, nobody paid less than $1,000 for daycare.
Gotcha.
So,
and I'm guessing y'all will adjust the rates for different regions in the country.
Exactly.
Okay.
So for a prepare audit, excuse me, you receive a regular audit package like I talked about before for the diff, but you don't know that really the only reason you're sitting in that chair is because you went to this particular preparer. So had you went to Kamari or had you went to K. Renee, you wouldn't be sitting in this chair. But because we're looking at Susie Q, hey boo, how you doing? Let's look at this return.
Let's get it cracking.
And unfortunately, you have preparers who know what's going on, and they simply shut down their business and they open up under another name.
Yeah, I just read a report about a guy, I think he was in Texas, while he was actually going to court. He got out on bail. He opened up another spot and did like a whole bunch of other returns.
Absolutely.
And I'm like, God,
yep,
man,
absolutely.
Their marketing pipeline must be ridiculous.
Man, oh my gosh, right? Absolutely. People, it's crazy. And like you said, you can tell somebody the truth and they're like, yeah, I don't really want to fool with you. I don't trust you. Well, so-and-so was I was dating somebody. This is funny. And I prepared his return. At the time, I was still working for the IRS, so I couldn't even charge him. I prepared his return.
You're allowed to prepare returns?
Huh?
You're allowed to prepare returns?
When I worked for the IRS, I could prepare them. I couldn't charge you for preparing it.
Okay.
I can help friends and family. Absolutely. I can't charge you. It cannot be an additional stream of income for me. So I prepared his return. So as I'm looking at his stuff from the previous year, I'm like, how much money did you give your church? He says none. I said, well, it says that you gave your church $2,000. Then I asked him, I can't remember what it was. I asked him about something else, and he was like, what is it? The non-cash contributions.
Oh, his badge.
Yeah, right. He was like, I didn't donate anything.
His non-market value bags of clothes.
Right, exactly. I said, okay, so remember this. I said, because I'm going to prepare your income tax return. So when I actually prepared his return, like his refund was like $1,500 less than what it was. Like literally, we stopped talking over that. He was like, I don't understand like why your numbers are so different. I was like, well, one, you made more money than you made the year before that. And then two, I didn't add stuff that the other guy added. You don't have employee business expenses. So that shouldn't have ever been on your income tax return. So he was like, I'm just going to go back to my guy. Like, I don't know what you're doing, but I'm going to just go have a good one. And I was like, and if you're audited, remember this conversation.
Well, hey, some you lose, some you don't.
Hey,
Hey.
that's on you. My job is to tell you the truth.
Okay, so we know to stay away from bootleg tax preparers.
Or do we?
Can't say that I didn't tell y'all more than once. Okay, so we're into the audit. Bring everything neatly. Be as honest as possible.
Yes.
And so that brings me to the point now. You actually left the service, right?
I did.
You don't do audits anymore. You now help people when they go through audit.
I do.
So tell everybody about that.
All right. So I left the IRS and I started my company, which is called Purpose and Passion Tax Company.
Purpose
and
Passion Tax Company. Okay.
I know it's so girly. I'm sorry, but you know that's what laid on my heart.
Target market.
It really is. Like my company was open because one, I really love helping people. That's just it, straight out the gate. Feeding the homeless, whatever it is. Like I just really love helping people. I get high off of that. So my passion is to help people get in a good place with their taxes and help them to understand. Like I really believe that we don't understand money the way that we should. We don't spend it the way that we should, and we don't handle our financial affairs the way that we should. The IRS can come in and shut down whatever it is you have going on. They can levy your bank account. They can levy your wages. They can issue a federal tax lien. And now your life has changed forever, all because you didn't know that there was actually help out there for you. Or maybe you knew that you could get help, but you couldn't afford it. So my company exists to provide affordable tax services to everyday Americans and to provide it in a way that they understand it and that it clicks in your head so that you actually remember what it said and that you comprehend it. Sometimes I found like, major companies, tax companies, like they speak above the client's head and they fast talk them and they have no idea what's going on. So my passion in my heart is to make sure that you understand it and that you're empowered to actually make a difference financially. So I consult. That's what I really like doing. I honestly don't like preparing income tax returns. I do it because y'all asked me to. But it wasn't why I opened this company. I opened this company to consult and to help people get out of debt. And part of that is providing offers to the IRS. I know what they look for. I made decisions on behalf of the government for over 9.5 years. So if you're not going to be approved for an offer and compromise, honestly, like if I see that there's something about your situation that for sure they're not going to approve you, then I don't accept you. And I tell you that take the money that you would have paid me and use that to pay off your balance due. I help people set up their installment agreements. Everything that I can do, you can do it for yourself, but you may not know how to do. So you pay for my expertise. That's what you're paying me for. If you have all the time in the world to do it or you think you can do it, by all means, you can do it. Right. Go for it. But don't call me asking questions because I'm not answering.
Yeah, but you know what they say about people that try to defend themselves in court. And, you can defend yourself in court and not retain a lawyer. And they say that's suicide. So
right.
Working with the IRS or going up against the IRS, you should have somebody that's qualified. Again, qualified and understands the process to help guide you through that process so you don't get gouged. So I get it.
Exactly.
I get it. So, all right, you brought up offering compromise.
Yes.
It's funny. I'm actually considering becoming an EA myself because I'm getting more and more people asking me for help with various things within the IRS. And now since they've changed it, because I've helped some people in the past, but the IRS changed some of the rules. So since I'm not enrolled or CPA, technically I'm not supposed to do it anymore. Every now and again, I will make a phone call with the client on the phone and help guide that through. But typically, I don't like doing it because I do feel it's a bit out of my depth at this point, especially with some of the stuff. But the offer and compromise, that seems very popular now. You hear all these commercials. The IRS has just issued this new thing when you owe more than $10,000 or owe more than $50,000. And call us today, give us your $10,000, and we will set you off on the right path and have you right off into the sunset with a white horse, and everything will be
free.
So, does the IRS have a program to do offer and compromise, or does the IRS have new programs to help people get out of debt?
I don't think that there's a new program. These are the same programs that have existed forever.
Oh, so that's just like advertising.
Marketing. Yes.
Oh, okay.
Yes. It's not a new program. You've always had to owe at least $10,000 to even qualify for an offer to the IRS. And then if you owe less than that and you honestly can't pay it, there's still a different way to help you. Nobody is stuck. I encourage people to use the offer and compromise pre-qualifier calculator, and that's how you're going to know. That's what I use for my clients. And if you don't qualify based off of that, then I'm not going to, I honestly have a day job to pay my bills. So I'm not out here client thirsty to help you, to take your money. Like, that's not fair. I'm in business to help you. So if you don't qualify, then we're not going to go forward for sure. You have to have a greater than 51% chance of an offer actually being seriously entertained with the IRS for me to accept you as that type of client. You also need to look out for big companies because I don't want to say that they don't care, but I mean, you just another number, you just another check, you just somebody else that's issuing them a payment to help them versus actually working with the individual. Like, people look down on small businesses, but honestly, I personally feel like with a small business, you get a more personal experience. Like, people actually know Kamari, like they actually got to see Kamari laugh. You don't know Susie John Q. You just know that you went to her office and one of her assistants helped you. You don't know if Susie John Q ever even looked at your information.
Right.
But you paid her $7,000.
Yep.
And I've spoken to many people who have said that they've paid money and the offers were not accepted and that the attorneys stopped calling them, accepting their calls.
Well, everybody, if you're just joining, I am Kamari Ellis, the Finance Rebel. You are tuned into the Money Hour every Wednesday at 7 o'clock. Today we were a bit late. So we got started a little bit late, but every Wednesday at 7 o'clock, we talk about money, something that's impacting people that I talk to. I do a thing called Ask Kamari as well, where I answer questions. And so I'm just trying to be a bit more proactive and get more financial education out into the universe so people can make better money decisions and we can gather wealth, or create wealth together. Again, if you're just joining, like, comment, and share this. I'm sure you know somebody with some IRS problems. They say just about everybody has an IRS problem in this country. So share it with them and be a blessing to them today. So, all right, so you now have your own company, and it's pretty and passionate, or passionate and pretty. What was it again?
It's purpose.
Purpose.
And passion.
Purpose and passion.
Company.
And I got to ask this, what are your company colors? Just curious.
Oh, you tried it. You want to know if I'm pink and green or if I'm red?
I'm just digging. You going up the rock?
Look, I have to go on my phone to see. What color is my website? And
for y'all don't know,
honestly, just trying to keep it professional.
Okay.
Let me see. I see that. So It's gray, red,
okay.
and white.
Well, since you brought it up, are you pink and green, or are you red and red?
I am not affiliated. I am me, myself, and I.
Okay, so for everybody who doesn't know what we're talking about sorority life. Pink and green is AKA red and what is it? Red and silver? Red?
Delta.
It's Delta. But the colors is red and what?
White.
Red and white. Okay. I might get in trouble for that. But
yeah, I think so.
Well, hey, I never pledged a sorority, so I don't pay attention at all. But okay, so now you're on the other side of the fence. You're helping people against the IRS. What is that like for you?
It's wonderful. I honestly, I really enjoy it because I really get to educate the taxpayer without having to whisper because I really work for the IRS and I can't really tell you what I really want to tell you. One thing I find is that people are they're afraid. They're really afraid, and I would definitely say work with somebody who you trust when it comes to your tax situation. Somebody that's going to tell you the truth. Somebody that will help you get out of the bind. And I think it's great. Basically, I get clients from referrals. I don't really market. People are like, she helped me and here, take her. Like, she know what she's doing. So I really do sincerely appreciate it. But I mean, like, it's good. I really like it. I'm working with somebody right now, and somebody else is coming on board. Like, they need offers. They owe a bunch of money. One person owe 18,000. Somebody else owe over 50,000, and they like, we need your help. And I'm like, I'm here. I got you.
Gotcha. So offer and compromise makes up the majority of your business, I'm assuming.
Yes.
Would you want to handle bigger audits?
I don't know.
So you want to keep your business relatively small. And that's no, like, so I'm asking these questions purely out of curiosity from the business side, right? Because I've seen one guy who does tax resolution that said he made like $20 million over like 10 or 15 year span. So this could be a very lucrative industry, but you choose to stay small.
I want to, honestly, like, I like interacting with my clients. I don't accept more than 3 offers at a time. And I do that just so that I can really give it like my undivided attention. I do still work. I am a mom, so I do this when I get off. I do it when my son is asleep. I do it on the weekends when I review information. So I want to make sure that at the end of the day, when something goes out, that purpose and passion is really correct. I want to have a good reputation, and I don't know, like, if I grow, I don't know what that would become. You know what I mean? Okay. I want to make sure that this is right, because I know what I know, and I don't want to hire somebody else and bring someone aboard, and now they messing stuff up.
Okay. All right.
So I trust me, so I'm doing me.
So you want to stay small, intimate, and purposeful.
Exactly.
All right. I love it. So I think you have a place to be. We were already late. It's almost 9 o'clock here, and I'm in Philadelphia. You're on the West Coast. So I believe we've been on for an hour. I didn't set my timer to keep track of the time. I usually do that when I'm doing interviews to be respectful of everyone's time. Is there anything else you would like to leave with people when they think about dealing with IRS taxes and audits?
One of the things that I tell people is, if you call and you're trying to resolve it on your own, I would say hang up and call back. If you feel like the person isn't helping you, you feel like they're being rude, make sure that you get their identification number, ask them what office they're located out of. As soon as they finish giving you their spiel, thanks for calling the Internal Revenue Service. My name is Miss West. My ID number is, and I remember it. It just went through my head. 1,704,854. How may I help you? Right after they say that, ask them again in case you weren't able to jot down their name or their ID number. Report them. Customer service is everything. Again, the IRS is not super aggressive when it comes to collecting. They're not rude. And if someone is rude, then report them. And again, like you said, it is great to hire somebody, but if you're struggling and you really can't, then there's a way to figure it out how to do it on your own. It might take you a lot longer. When the IRS issues the LT11, that is the final notice of collection activity, they're serious. That is not a warning. That is telling you what their next action is. Some of the secrets with working with the IRS is when they say we may, that really means we will. We may levy? No, they're telling you we will levy. We're going to levy.
So you know what? I just thought about something real quick. We talked about levies before offline. Can you talk about that real quick?
Yeah. So when it comes to a bank levy, the bank is supposed to hold the funds that are available. Let's do it this way. So let's say your account has $1,000 in it today. So the IRS has issued a bank levy. That $1,000 is what your bank is supposed to put on hold, because that's what was in your account at the time of the bank levy. Let's say tomorrow you go to the bank, you haven't realized that there's a levy, and you deposit $5,000. Per the bank levy and per the actual verbiage on the notice to the bank on how to retain the funding and how to enforce the bank levy, that $5,000 is honestly yours. That $5,000 should not be on hold, because when the IRS issued the levy, There was only $1,000 available. However, the banks don't have a separate account that they're putting your money in. So therefore, anything that you deposit into that account during the next 30 days, your bank automatically holds it. But it's not because that's what the IRS told them to do. When it comes to a wage levy, your employer is supposed to allow you 3 days for you to reply. So some people will say, like, all of a sudden I had a wage levy. Well, honestly, again, that's not what the notification said. The notification told your employer to notify you. And then after 3 days, business days, if you do not return the form back to them, then this is the amount that they need to withhold. And it's not based off of your W-4. However, employers and banks, they don't always enforce the levy according to the way that the IRS issued. There were tons of phone calls that I've answered and clarified for the bank and for the employer on how to actually enforce it. And so if you have a levy and they haven't provided you, they haven't enforced it correctly, I'd let them know. Like, they can't do it. It's illegal.
Okay. Okay. Last question. Taxpayer advocate. When should somebody reach out to the taxpayer advocate?
After the IRS has run its final course. So the IRS has a 30, so per the way the IRS reads for employees, it's like basically like if the IRS hasn't responded, within 30 days, then basically it's like 30 days after the initial 30 days, and then you should receive a notice. And then after that notice, if another 30 days pass and they still haven't resolved it, basically like 90 days. Then that's when you can reach out to them. But unfortunately, like, this is when it does come to the budget. Like, they need to hire, and unfortunately people are leaving and they're not able to hire. So it is taking longer to resolve some things that shouldn't be taken and going on as long as they should. So it's up to you.
Okay. Okay. Now, I know I just said that was the last question. I got one more on this.
Okay, 558.
Do you believe President Trump won't release his taxes because he's still in audit?
Because he's what?
Still being audited.
Really, Kamari?
You're an auditor, right? I want to ask you.
That has nothing. Let me say this. The
Have you
politically
seen
correct.
audit go like 4 years?
There are some audits. No, there are some ridiculous audits. Please no, there are some ridiculous ones. I will say this: he could release his income tax return if he wanted to. Mm-hmm. That is the politically correct answer.
But you don't have to be politically. Oh, maybe.
I do.
Yeah, you do. Yeah, I'm sorry.
I do.
I couldn't help myself. All right, well, let everybody know where to find you. Website address, phone number, give them everything.
All right. My business phone number is 510-833-9833. The name of my company is Purpose and Passion Tax Company. I receive emails at krw@Purpose and Passion taxco.com.
Okay, we got it. Well, again, I appreciate you taking some time out of your busy day. I'm sure you're out there in that beautiful California weather where it never rains. So
hey.
Thank you so much. Thank you so much, Ms. K. Renee West, for coming to meet with us today and talk to us all about tax returns and audits. So thank you so much.
You're welcome.
If you will.
Wait, you said what?
We'll have to have you back.
Okay, sounds good. Thank you.